All right, real quick. What we're looking at right now is a 4-hour chart um, of the Boeing company. I mean, we can tell us one on one. We always like to look at the widest range possible, right? To see the overall trend and trend in different time zones and so on and so on and so on. Ultimately, this stock itself is an upward trending stock. However, much remains to be seen um, as it relates to this stock. So basically, what I'm doing is doing an Elliott Wave count. In other words, a pattern count or pattern analysis of what patterns could be taken folding or could have been taken folding. And this is going all the way back to a weekly. We've got a support trend line right here, just for reference. Um, okay, so we went all the way up to this high. Now, there's a couple different things that took place up at this high. Some would have called this what you would call a head and shoulders, where you have the shoulder and then you have the head, and then you have another shoulder, and then you have a neckline. And once price action protrudes below that neckline, typically you know, or above, if it's the other way around, inverse, you have a fast moving action after that. So anyway, from an Elliott Wave standpoint, we look at this as having basically been what we would consider like an ABC three-wave pattern down. And not to get too complicated, but what we're expecting is for, in the very least, we expect actually a wave down, then a correction of that wave down, and then another wave down, to keep it in layman's terms. Um, so in this particular short time frame, we had a movement up, which I'll explain, but this is what we call a 5-3-5 pattern. The first movement up. Now, again, just to keep it frame of reference, the overall largest time frame is an upward trend, right? That was on a monthly chart. We put it on a weekly chart. We see here that in a smaller time frame, there's in the bare minimum a bit of a consolidation. I've been talking for 2 minutes and 30 seconds. Okay. All right, so that consolidation is where we want to figure out as investors or traders where do we want to be. Now, the trade that I highlighted was a bit of a counter short-term trend movement. In other words, the short-term trend for Boeing and is actually downward. Well, the midterm trend is downward. But before we see another low, I believe we'll see another midterm high because I think that this pattern right here is what we call a Elliott wave. And I'm gonna go down to a 4 hour. It's the Elliott wave triangle, well, triangle pattern, but it's a 5-3-5 where it moves up in five waves, right? One, two, three, four, five. That was a five-wave pattern, and now we have a corrective pattern. It could be a triangle, it could be a couple of different Elliott wave corrective patterns, but I identify this as a triangle. Um, okay. So, I was trying to see what the heck that was, where the delete button is, but I couldn't find it. All right, so yeah, we had a movement downward, but for all intents and purposes, what we're focusing on is this five corrected pattern and five-way moving up. So what we're betting on is that this was correctly counted a five-way pattern. If this was correctly counted a five-way pattern, then we have a correction here, and then we go up in another five-way pattern, right? This is a triangle A, which is A B C D E, A B C D E E. Now this is how we E based upon the guidelines terminates over here, right? And it should not protrude past the start of wave C. The start of wave C was at 123.87. So as for your trade, Maya, your stop should be at 123.47. Currently, price action right now is trading at 126.55. Okay. Um, so okay. So that is the trade. So essentially, if you're getting in today sometime around 126.61 at 324, 120.61. Your stop loss is gonna be stop loss is gonna be 123.87, right? Now there is a bit of an addendum to this because it could be a B, C, D, E, and in powerful movements, sometimes wave E may overshoot that bottom line by a little bit, right? That's actually permissible and possible from an Elliott Wave guideline, Elliott Wave pattern guideline standard. But we typically like to, you know, it either is or it ain't. Many times when you're doing technical analysis, if it's kind of like one of those, if it does this, then that. If it does this, then that. There ain't no if it does this and that. As it relates to pattern, I've been talking for 5 minutes and 30 seconds. All right. So what we're expecting, yes, is I would get into a position and keep a tight stop at 123.87. Okay. And it could be a situation where it does somehow break through your stop, and that would mean that the analysis, at least that price pattern analysis, was actually wrong. Um, if I do the math real quick, 124, so that's two point. Oh, excuse me. That's 126 to 126.61 to 123.87 is 2.74. Um, 2.74 points. So I'm just seeing how much actual risk you'd be taking on. And so you always want to have a certain kind of risk reward ratio. But from a percentage standpoint, 2.74 divided by 126.61 equals. All right, so you'd be risking about 2%, 2.1%, which is about the kind of trade ratio that you want to have. And the target would be uh, A in the 535 zigzag pattern. C is typically the length of wave A. A equals C. Or C is 1.618, which is part of the golden ratio. 1.618 times the length of wave C, right? So our first target, typically when we identify like a 535 zigzag pattern, our first target is um, once we identify, okay, this wave is about to be over with, now we're going up here, right? Once we identify that, um, uh, we calculate from where we believe the terminus was. The terminus is where the end of the last wave was. So it's looking like the terminus actually for this is. Oops, let me get that up out of here. There we go. All right, so it looks like the terminus is. And again, this is still moving, still going. You know, it's still developing the trade itself. I think that yeah, it's a rather a bit of a risky trade, but as long as we stay above this level here, 123.97, and again, I just gave a scenario where this price action can actually be protruded and it still be somehow permissible. But from a trading standpoint, I would just say keep your stop loss. Um, let's go with 122.90. It's a little bit more than 2% over risk per se. But I would definitely yeah, you got to rock and roll. Where is this? I could get technical into like when you see the momentum capitulating or finding support around 40 and what that means for market turns and stuff like that. But I'm not gonna get too technical because at the end of the day, and it's about risk reward. We have an analysis which helps us define our entry and or exit points, and that's that. Now for the calculation as to what our uh, what our target would be, right? Because again, we confirmed that 123.87. Um, excuse me, yeah, 123.87. Okay, that's that. The price action is at 126.58 right now. Okay, so From that, what we want to define is okay. So if A is in the bare minimum going to equal C. Now sometimes C could actually be 61.8% of the length of A, right? Uh, but just for most common standpoints, so I would add this. I would figure out okay how much what was the length of wave A? Wave A 9006 to 186.44. So what's that? 190 or 96.38. So 96.38. 96.38. So so 220. Okay, so 220. 220 is actually your first target. Okay. So what we would essentially do typically, I'm going over to my tab here that somehow I can't seem to get in place. I'm going over to my tab here. I'm gonna put a trend line at that particular level, horizontal line, 220. All right, boom. That's the target. So we get to 220 from 123. This is set up here. 220 minus 123, 87. No, yeah, so it's about a 78% return. I just had to do the math on my phone. So you're risking about 2-3% to get a potential 78% return. The time frame for this, let's see, Wave A went from March 18th to March 25th, so that was about a week. So about a week to get that particular game. Tremendous. So there you go, 12, 13 minutes. This is the setup. We're gonna go to the 1 hour again. We have I would be long anywhere above 123.87. All right. Again, but from a longer time frame, I would expect the zigzag ABC. We go up here, it will be pretty brisk, and then we'll come crashing down for another leg lower for Boeing and 89. Yeah, it'll be tremendous. I would have to do some further targeting for that, but yeah, we definitely, if airlines are ever going to come back, which I imagine they will, um, you know, Boeing is at the I guess precipice of it all because they manufacture so much of the engines and the technology itself in those engines that Southwest had and some of the other airline companies had is manufactured by Boeing. So yeah, I think that this is coupled fundamentally with some of the different talks of bailouts. I'm not sure what the new status is right now with the bailouts that the airlines are getting, but we all know that the airlines will get some sort of assistance. It's really impossible for the economy to kick back into true full swing without that. All right, so that was 15 minutes. I had to take some time. I love you. In my office here. All right, Boeing.